Hello guys and welcome to my channel. If today is the first time coming across my channel, kindly don't fail to hit the subscribe button, put on notification bell so that anytime I post content like this, you will be among the first to be notified. In today's strategy, I'm just going to be teaching you how and why many new traders often struggle to make profit and the solutions to all this problem. You know, when you're a trader, probably have been trading for many years, many months, or you just nearly joined and you're not making profit consistently, it becomes a problem. So, definitely, if there's any problem, there must be a cause, and if there's any cause, there must be a solution to all those causes or those problems. So, the first thing is lack of knowledge and experience. Now, many traders out there, either you are using your mobile phone, your laptop, you are trading forex, you are trading synthetic indices, or you are trading the crypto market. The first problem is that majority of the new traders or many traders who are not consistent in making or who are not making profit consistently are first they lack knowledge and experience. The trading platform is not just any how place you come and you trade whatever you wish. There are certain rules and regulation guiding it, and aside that there are also many things you must consider when taking either you're a buy or you're taking a sell. So the first reason is new traders often jump into the market without fully understanding how it works, leading to poor decision. Now, let me give you an example here. If you are a new trader, probably you watch a particular strategy on YouTube, you don't have knowledge regarding forex before. So probably you just open your chart. This is on volatility 75, which is very popular in the derivative platform. You know, you can just come. No, they told you that when these lines, because when you're using moving average, it is usually the crossover that you do use. So they'll tell you when this blue line crosses the red line downward, you should take your sell. And when this blue line cross the red line upward, you should take your buy. I'm not saying the indicators are lying, but the truth is that you can't just rely on that information alone and then think you are going to be profitable. Because for you to take a buy or for this line to cross this other line, there are some certain parameters that you must check and you must see before you do that. First thing, you have to check where is price coming from. In the trading market platform or in the forex market, there's what we call liquidity. Has this price taken out liquidity? Because if liquidity is not taken out, even if this line cross this red line, there's probability that price will definitely not go far and it will bounce back. And if you entered at that moment, you will hold your trade because you are programmed to take the trade only when the price cross, and you forgot that, or you don't have knowledge that um there are other parameters to check in order to make this very, very effective. So, to prove it to you that price is already buying, even without crossing here now, you have to check has price cleared the liquidity for today? Because if you are going to use the daily time frame, you can just come to your daily time frame. Now, if you are going to be using the previous day, where is the candle for yesterday? This is it, right? That is the candle for yesterday. That was where price got to as at yesterday. Then this was the close for today, right? Now let's go back to that 30-minute time frame. Now you can see that before this was yesterday's activity. For you to know, you can click on Ctrl Y to split your chart. So as at yesterday, this was the lowest point price got to. This is it right here. Can you see? So for price to go below and close above, then start giving this move, it means liquidity has been what? Taken out. Probably if you don't understand what liquidity is or you want more details, you can go online to check, or you can check my WhatsApp number in the description below to join my mentorship class where I teach how you can trade both forex and synthetic indices, and then you'll be profitable. I'm not talking of making scalping the market. I'm talking of making consistent profits. So if you're interested, you can check the description. So for price to cross and take out the liquidity from yesterday, so there is high opportunity that price is going to buy. And if price is going to buy, where is price going? That's another question, because any journey that has a beginning must have an end. If price is buying, where is that price going to definitely end? That is the next question. You might not be able to easily identify where price is going to reverse at this point, but when you come to your H1, that means your 1 hour time frame, you can easily tell that price is likely to reverse at this point. For those of you who understand the smart money concept, you can easily decode why I highlighted that area as a possible area where price can get to then reverse. So you can see that when you lack this information and you are new into the trading platform, you might mess up big time before price will start. Before you even start earning, you must have made so much losses in, in trading the forex market. So it is very important that you have knowledge and experience of what price is doing. Now that is the solution. They say educate yourself on market fundamentals, trading strategy, and financial instruments. Use demo account to gain experience without risking real money. Now many traders come into this forex market all in the name of what? Making money, right? But they don't have that information that is going to place them to keep making this consistent profits on a regular basis. So if you are a new trader and you see an opportunity to learn these fundamentals, don't hesitate to do, because that is the only way you can be consistent. And if you're going to start with your demo account. With your demo account, you can perfect whatever you are being taught. You can perfect your strategy. Then when you are totally done, you can then move to trade the live account. Number two is emotional trading. That is another reason why some traders are inconsistent when it comes to profit. Emotional trading. Reason: emotion like fear and greed can drive impulsive decision, causing trader to deviate from their plans. Solution: develop a solid trading plan and stick to it. Implement stop loss and take profit level to remove emotion from your trade. Good. Going back to our mix account now, somebody who doesn't have that insight of what trade is doing or what price is doing, he or she may just open, okay, because he took a buy at this point and he or she is happy, oh, the price is going towards my favor. All of a sudden, with this only move alone, it can create fear. Is that right? It can create fear, and the person will do what? Exit the trade, or even leave it. Probably it come back to area of entry, then you close it on loss. While some, just because price is going up, they don't know that this point is where price is going to definitely reverse. They don't know that price is definitely going to reverse at this point. So, due to greed, they believe since price can cross below here, and give this drastic or this huge move. So if definitely price going to cross here, it's going to give a huge move all the way up. So by so doing, They will just hold the trade up to this level after making profit. Instead of them to close it, they won't close it. The next thing, the trade will be reversing. And in their own mind, oh, it will soon, the trade will soon bounce back to the normal trend. It will soon, that's how it's going to do then. It's definitely going to hurt them and loss just because one, they don't have the knowledge, and secondly, they traded based on greed. You can see that you, if you lack all this information as a new trader, then you are definitely going to face huge loss, which is going to make you not consistent in profit making. Then number three, over trading. Yes, there are some traders who have this habit of over trading. All they do is they focus on one time frame. Yeah, they focus on one time frame. So immediately their moving average cross below, they take sell. Once they make little profit, they close it. When they cross above again, they take buy. When they make little profit, so instead of them to close the trade once they have made profit, and when they continue doing that, before you know it, they will end up losing all their initial profit they made and also lose their equity. That means the capital they invested in the trading. So over trading is not what can make you consistent in profit if you are a trader. So if you are doing that as a new trader, then you have to stop it. What you should do is go educate yourself or probably get someone to mentor you on how this market works. Then have a plan for yourself. Create a plan. When you create a plan, you won't be over trading because when you enter a position, once the position has delivered or once price hit your take profit, you rest for that day. So you'll be watching or observing the market till it creates another opportunity for you. So the solution is focus on quality trades rather than quantity. You can see set clear entry and exit criteria to avoid overtrading. So that is the solution to that overtrading. Then number four, poor risk management. Reason new traders often risk too much capital on a single trade, which can lead to significant loss. Yes, let's say for instance, a trader who just joined Forex newly because he has this mindset that when price cross below, or maybe probably there was a time he took such trade in his or her demo account. When price cross below, it delivers so much. Maybe probably he has used 20 cents or $1, and in his demo account, the trade was able to give over 100 or $1,000. Now he has what will be his mindset is he go and definitely look for such amount to fund the account, and when he or she funds the account, he will also go ahead to use that same $1, having the mindset that once he use $1 is going to make $1,000 immediately, and at the end of the day, he will lose both the he will lose the whole entire account because he has used a high lot size. That means he has used a very high lot size. There was no risk management involved. So, as a trader who is new, all these things can create room for inconsistency when it comes to profit making. So, the only solution to that is use risk management techniques like position sizing and never risk more than a small percentage of your account on any entry. That means when you have a $10 account, you shouldn't be opening positions like 3, 4, 5 at a time, no, or using more than more than 5% of that account for trading. It is very risky. You can have $10 account and you are increasing your lot size to 0.5. Are you taking risk that will definitely end the account, or you want to just uh, make profit overnight without your calculation, without doing the necessary calculation? So, as a new trader, don't try such. Avoid such act of increasing your lot size so that it doesn't end up taking your predictions might be right, your analysis might be okay, but when a little drawdown comes in, then it will definitely affect your account. So even if your analysis are on point and everything is on point, that shouldn't be a go ahead for you to use too much lot size for entry. Then number five, lack of trading strategy. Many traders out there doesn't have any trading strategy. I can prove it to you. You will see a trader who said he's trading forex, and when you ask him or her which strategy are you using, he will tell you, I like using the Bollinger Band and the ADX. Once these two indicator cross up, it gives me a good entry. Tomorrow you see him again using uh, envelope and another indicator entirely. So such trader doesn't have any strategy, because a trader who have a strategy will definitely put a strategy in place, backtest it so many times, then ascertain the profit to loss ratio. If it gives more profit than losses, then you make sure you continue using that strategy. So if you're a trader and you don't have a specific strategy, it can also lead to lack of consistent profit making. So the solution is develop and follow a well researched trading strategy. Backtest your strategy on historical data and adjust it as necessary. That means after creating the strategy, backtest the strategy, go through the previous event, compare the losses to winning. Then you can also use your demo account to also backtest it. If the strategy is going to be consistent or is going to be making more profit than losses, then you add it to your arsenal. Then number six, ignoring market trend. Yes, that is what exactly I try to explain here. You involving the taking out the market trend. That means when you check the daily time frame, when you check the daily time frame, what we notice here is price is what? Price is definitely going down. That means price is on a downtrend. So what you should be anticipating for is opportunity towards the downside in your lower time frame. Exactly. So, but if there's any reason for you to take a counter entry based on technical analysis, it is welcome. It might be as a result of pullback here, because despite that this trend is down, we can still see instances where we have some kind of bullish candle towards the upside. So this might have been as a result of pullback in the process. So, but if there's no any pullback, then you find the opportunity of going down, that mistaking sell, then it will be better, because it is there's high probability that price will definitely drop, since the general trend is what? Dropping. So if you fail to understand this and you don't understand how to also apply the pullback format based on technical analysis, then it will also be a very, very sad situation when you encounter huge losses. So that being said, let's keep going. Let's talk for. So the solution to that is trade with the trend by using technical analysis tools to identify and follow market trends. Why number seven, impatient. Reason why new traders are not consistent in profit making is because they are impatient. They don't wait for a good setup. Yes, so they are always eager to take entry, just because probably they might just have one hint which they feel is definitely going to make the price change drastically, and at the end of the day it will end that account to losses. Exactly. So new traders often seek quick profits and give up if they don't see immediate profit, immediate result. Yes, some of them will learn forex. They have good mentors who are teaching them, but based on the fact that the process it takes to make that profit is not something that is very quick, so gradually they lost interest and they are looking for something that will generate fast income. That is why you see many traders will tell you today they prefer trading robots, because they feel the robot will quickly make profit for them. But when they check the analysis, the profit the robot is making is not even up to 2% of the losses it has taken from them, but they still feel that is the best way, and which can never make them a consistent trader who will be making profit consistently. Solution: be patient and focus on long-term success. Understand that consistency in trading takes time and discipline. That is it. You must be disciplined and you must also apply consistency. You must be consistent with your strategy. Consistent. Let's try it on every PL. Definitely, there might be some pair that will give you accurate or more better result than the others. So when you do your back test and you are patient enough, you'll be able to know which pair will your strategy be suitable for. Then that's over leveraging. Solution to that, okay, over leveraging. Reason: using too much leverage can amplify losses, making it difficult to recover from a bad trade. Yes, when the leverage is too much, then if you encounter loss, you can hardly recover. This happens on pairs that has huge volatility. Talk of the gold, the NAS, also then on synthetic talk of the boom and crash. They are very volatile. Talk of step index. So when you are not well informed on how these things work, only that alone can even drain your account before any other condition comes in. So that is why you must be very, very prepared. So the solution is use leverage cautiously, understand the risk involved, and avoid over leveraging your position. Hashing the market. Yes. Reason. Story. Chasing the market. Reason. Some traders try to jump into trade too late, hoping to catch a price move that has already happened. Yes, there are instances you don't know that this buy opportunity has expired. So it is now time for price to sell. You will just open buy, and before you know it, price will start dropping. That is chasing. That is an act of chasing the market. Solution to that is avoid chasing the market. Instead, wait for clear trade setups according to your strategy and enter trade at the right time. So if you are a trader and you are always chasing the market, it is a very bad habit. The best thing to do is to wait for price to get to those areas you are expecting it to reverse, or areas where you are expecting it to start pushing up or rise. Then wait for the kind of formation that is going to give you a clear picture that indeed price is ready to either buy or sell before you take your entry. Sometimes some of you, after watching YouTube's, you discover a strategy, you just go straight to your live account. Probably price is making such kind of move you thought you understand already. You start placing orders, and at the end of the day, the trade will just go against your prediction and then take you out because you didn't take time to do your own analysis to check where price is coming from, where is price heading to before taking that entry. So as a result of that, you will be left um you'll be left in a state of sadness because you have already tried to chase the trend and the trend was no longer in that direction. Solution: develop discipline by following your trend plan strictly. Keep a trading journal to review your trades and learn from your mistakes. Exactly. Okay, that was on that is lack of discipline. The solution: avoid chasing. We've talked about lack of discipline. Some traders are not disciplined at all. Failing to stick to a trading plan or strategy often leads to inconsistent results. Yes, some of you have you even joined a a coaching class where they teach you the fundamental basic um, materials or tools or information needed. But when you open your chart, you just have this mindset of doing what you feel at that moment rather than following the well arranged plan for you. for you to see results. So instead of you to wait for buy, you'll be selling because you feel the market is supposed to be selling, or it's not supposed to be buying. And already you have reasons to take buy. And at that moment, your eyes are not open or clear to see that this opportunity that is here right now is buying opportunity, not sell. And what do? You just jump in and then you take trade. And when it go against you, the truth is majority of the trade out of 100%. I can tell you clearly that 85% will always have who to blame for their losses. They won't admit that they committed the blunder, but they either push the blame to the coach who taught them the strategy or to the broker, or if at all they can't get anyone, then they will definitely blame um the the programmer of that particular um site. So majority of them hardly take blames for their own mistake. So the solution to that is develop discipline by following your trading plan strictly. Keep a trading journal to review your trades and learn from your mistakes. By addressing these 10 issues, new traders can generally improve their chances of achieving consistent profit and long-term success in the market. So when you are new, or probably you are part of those traders who are making losses, I believe with this 10 points, you can pick areas that you know you are also you are not doing well in. Probably maybe yours is jumping into trend, or you don't even have a strategy in place, or you are always impatient, or you are not the type of trader that apply risk management. Then out of these 10 possible reasons why new traders or traders in general cannot make consistent profit, if anyone you find yourself in any of these acts, then please try and amend. Then you'll see in due time you start having a good change, and then there will be positive result. If you want to learn forex trading or probably how to trade synthetic indices, so don't hesitate to message me via my WhatsApp number, where I have materials on ground. I have deep videos on how you can understand this market and how you can trade it and be a consistent trader that will be making profit rather than losses every single day. Thanks for watching. If you are yet to subscribe, make sure you hit the subscribe button. Put on the notification bell so that anytime I post more content, you'll be among the first to be notified. Cheers, guys.